All right, let's cut right through all the noise in crypto. We're going to forget the hype, forget the drama. Today is about giving you a disciplined, repeatable framework so you can analyze these complex tech investments and actually find some clarity.
So let's just start with the main problem, right? Crypto markets are insanely noisy. The story, the narrative, it can flip on a dime, and it feels like you're just trying to find your footing on shaky ground. So how do you actually invest in a way that isn't just, well, a complete guess? And this quote right here, this is the key to everything we're going to talk about. See, the real edge isn't about perfectly predicting the next hype cycle. It's about being able to tell the difference between shipping and signaling. Basically, separating the projects that are actually building stuff from the ones that are just really good at talking about building stuff.
Now, while the source material for this whole idea was focused on a single asset, the framework itself is, well, it's universal. You should think of this as your personal playbook. It's a system that'll help you go from just watching from the sidelines to becoming a disciplined analyst. And you can apply it to crypto, AI, you name it. Okay, let's dive right into part one of this framework, what we're calling the innovation engine. This is all about popping the hood and taking a good look inside. We need to find out if this engine is actually running or if it's just a shiny piece of metal that doesn't do anything. And here it is. This is the first and maybe the most critical question you have to ask yourself. It is the ultimate test. Is this project just promising cool stuff on a future roadmap? Or is it actually delivering products and features that a real community of people is using right now? And you can really simplify your decisions with this little formula here. If you see genuine innovation and people are actually using it, that's a huge signal of strength. But if you're innovating in a vacuum and nobody's showing up to use the thing, whoa, that's a massive red flag. That's your cue to step back and seriously recalibrate your thinking.
So how do we measure this stuff if blockchains don't have P&L statements or traditional revenue? We need a different way to gauge the economic activity. And that's where these things called cash flow proxies are so useful. Just think of them as the network's vital signs, like checking its pulse to see if it's healthy and in demand.
So here's what you're actually looking for. Are the on-chain fees, what people pay to use the network, are they growing consistently? That signals real, honest-to-God demand. How's the security? Are people staking and showing long-term conviction? And maybe most importantly, can the project make decisions and evolve, or is it stuck in the mud? These are real metrics you can actually track, not just feelings or hype.
Okay, let's get to part two of the playbook. A powerful engine is great, but it's pretty useless without a car around it and roads to drive on. So now we're going to zoom out and look at the bigger picture, the ecosystem and the project's ability to adapt. And this question is the perfect way to frame it. Is the ecosystem around this project a vibrant, thriving city that's constantly attracting new builders and new ideas? Or is it starting to feel a little empty, like a digital ghost town that the best developers are quietly leaving? Because even the greatest tech will wither and die if it's all alone.
And these are the vital signs for that city's health. You're looking for hard evidence of activity. Are hackathons buzzing with developers? Are the grant programs actually leading to finished products? Is the documentation good enough that a new developer can jump in and start building? These things show you if an ecosystem is actually attracting and, more importantly, keeping its top talent.
And this is so important. The real, long-term value of a project is directly tied to its ability to adapt. This market is ruthless. Platforms that are too rigid, the ones that can't evolve with the times, they get absolutely punished. It's that ability to listen to users and integrate new ideas that builds a real, lasting advantage. All right, so now we have our framework for analysis. Let's make this practical. Let's talk about how you can take these ideas and apply them directly to how you structure your own portfolio. There's a powerful model that a lot of professional investors use called the core satellite approach. It sounds complicated, but it's not. It's just a really disciplined way to balance your deep, long-term belief in a few key projects with the flexibility to make some smaller, more tactical bets. Visually, it looks something like this. That huge chunk of the portfolio, the core, that's reserved for your highest conviction ideas, the stuff you want to hold for the long haul. Then those smaller, satellite positions, those are for playing trends, for event-driven trades, without risking your entire portfolio on a short-term idea. And of course, no strategy works without rock-solid risk management. These three rules right here are completely non-negotiable. 1. You have to know exactly what would make you say, I was wrong, and get out. 2. Don't go all in at once, averaging with staged entries. And 3. You have to take profits. This is how you protect your capital so you can stay in the game long enough to be right. And finally, you always have to remember to zoom out.
the macro environment, the big picture economy. It matters a lot. It completely changes the market's appetite for risk. When money is tight, the market rewards stability and reliability. When money is easy, it rewards aggressive innovation. Your portfolio has to be able to adapt to that reality. So, let's bring this all together. We've built the framework, we've talked about portfolio strategy. Now in this last section, let's turn this entire analytical process into something you do continuously. Your investment thesis for any project can't be this static thing you write once and then shove it in a drawer. No way. It has to be a living thesis. Think of it as a living document that you are constantly updating with new information, tracking if the team is actually delivering on its promises, and then using that intel to refine your plan.
And you know what? This is it. This is the ultimate takeaway. If you remember one thing, remember this. It all comes down to this single, crucial distinction. Are you investing in execution, in real, verifiable progress and measurable adoption? Or are you investing in a narrative, in promises, big announcements, and a lot of hype? Your capital, it has to follow the execution.
So that's the final question this playbook really leaves you with. And I want you to be honest with yourself. Take a good, hard look at your own portfolio and ask that question. Is it built on a compelling story? Or is it built on tangible, measurable execution? Because the answer to that question, it's going to make all the difference.